Well, welcome to the markets picture. Now, let's take a brief look at what happened on the Asian side. Those markets mostly rose as investors reacted to a debut of a company that listed in Hong Kong. But as we go through the markets, Hang Seng closing fractionally higher. When we look at the Chinese mainland Shen markets, they happen to lag just a little bit. The Shanghai Composite down nearly 0.25%. The Shenzhen Composite rather also in negative territory, rather down 0.25%. And the Nikkei up 2.1%. European markets seem to be notching to a new record high, and this is, of course, as investors digest a slew of economic data coming through from the U.S. and U.S. futures right now also in positive territory. But to give us an indication of the trading week that was and probably what we can expect in the next few weeks or so, we're joined by Lukman Otunuga, who's a senior research analyst at FXTM. Lukman, thank you so much for your time. How would you characterize the trading week that was?
I think we could say this was a week heavily influenced by inflation expectations. Throughout the week, we saw the sentiment pendulum swing back and forth in tune with Fed members. Interestingly, though, it looks like the risk-on mood is back thanks to an expected $6 trillion budget announced by President Joe Biden today. Despite the caution we saw earlier in the week, we saw Asian stocks close higher. European markets are in green. US stocks are likely to open higher as well. I think markets now remain more moved with the expectations that this stimulus could support the economic recovery in the United States and across the globe.
In terms of the debate around taper or we don't do it, where are we right now with that?
It's been an interesting one because earlier in the week we saw a chorus of Fed officials reiterate that the recent spike in inflation is transitory. But then two Fed members signaled that they were willing and open to talk about taper in the future. So this has actually fueled speculation that the Federal Reserve could be moving towards discussion tapering. But of course, this will be heavily influenced by economic data in the United States. You know, further signs that the largest economy could be growing or signs that the economy could be overheating could force the Fed to act sooner than later.
Are there any events that we can look out for in the next month or so that will give us an indication or at least some kind of concrete signals about where the Fed might be going?
Certainly. I mean, today we've got the core PCE inflation index, which is the Fed's favored measure of inflation that takes out the volatility from food and energy. This is a big deal. Markets expecting inflation to rise 2.9%. This will be the highest seen since 1993. So if the report meets or exceeds expectations today, this could be one of the signals that the Fed may be forced to act. Next week, we've got the US jobs report. Further signs of an improving labor force in the United States may signal more consumption. As consumption increases, this could support inflationary pressures. We have retail sales, and of course, later in the new month, the FOMC rate decision, which should provide the clarity needed over what the Fed's going to do in the second half of 2021.
From the data you're looking at, what are the sentiments say around the South African rand and the economy?
I mean, given how a few months back we were speaking how South Africa, was investors were fearful over South Africa experiencing another credit downgrade, and looking at the recent developments last Friday that South Africa actually didn't receive a credit downgrade. This is a good step. This is going to improve confidence of Africa's most industrialized economy and suggest that South Africa could be heading in the right direction. And I feel the SARB feels the same way. If we looked at the recent SARB meeting, they expressed optimism of the economic outlook for 2021 and 2022. However, though, I think the threat of a third wave of COVID-19 could throw a proverbial wrench in the works, and it's something to really pay very close attention to. But nevertheless, looking at the South African rand, it's appreciated against every single G10 currency this month. And looking at the dollar against the ZAR, it's trading below that. It's trading below that 18.0 level, and I think as the dollar continues to weaken, the dollar ZAR could appreciate to levels not seen since February 2019.
Yeah. Lukman, always a pleasure having a chat with you. Thank you so much for your time. That is Lukman Otunuga, who's a senior research analyst at FXTM.